Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Thursday, November the 17th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We create multiple hypotheses. There goes the 23s. Dang. We create multiple hypotheses in order to have a plan in place for whatever the market throws at us. We want to make sure we know what we're going to do when the market fits our hypotheses. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. This is retail traders operating within a self-organized learning environment. We do everything live in the go-to during these pre-market sessions. Then we do live trading and analysis during the course of the trading day. Read through the disclaimer, please. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday, we talked about this, that we're likely going to spend time yesterday filling in this low volume node between the double distribution day from Tuesday, and I figured we'd fill it in and then we'd move away from it. Well, we didn't. We just basically sat inside of this range, okay, the whole day and just chopped, and it was a wasted day. Didn't do much trading, and just a sideways inside day. We are seeing some real balance here, even on the news. You know, the best they could get out was to go down and test the low and put in a weak low here. We now have a double bottom. It is a double bottom, right? Yeah, it is a yeah, it is a double bottom. There's where they put the double bottom in. So we have a double bottom now at 21 or 71.75, but overall this market is very much in balance. We just had some major news releases at 8:30. Didn't move the market much. Yeah, gave me a good opportunity in gold, but that was it. We had foreign security purchases in Canada. Expected 12.23, came out at 11.77. Building permits were expected 1.19, came out at 1.23, what it was prior. CPI month over month came out as expected, 0.4. Core CPI month over month came out slightly better at 0.1. Sorry, a little bit worse at 0.1. And then Philly Fed came out 7.6, expected 8.1, and then unemployment claims came 235 versus 257 expected and 254 previous, and then housing starts were better at 1.32 than expected. So, I mean, you actually had a mixed bag of news here, and that's probably why we didn't get the bigger move in the market and take us out of balance yet. We do have everybody and their brother from the Fed talking today. I don't know what it is about these FOMC members, but they certainly like to open their yap. So in about 8 minutes, we've got, or actually in about 3 minutes, we've got Dudley speaking. Then the big one will be Yellen testifying at 10. Then we've got the Bank of Canada review, natural gas at 10:30, and then 12 o'clock we've got, that's not important to us, 12:30 we've got Brainerd speaking. So we got, three Fed speakers this morning and this afternoon, early afternoon. So just be careful, especially when Yellen starts testifying. And this will be sustained in terms of she's going to be testifying for, longer than just a couple minutes. So depending on what comes out of her mouth during this, the market can react to it. So you have to pay attention to when she's speaking and when she is done speaking. Taking a look at the macro to the micro, I always like to start my day the same way. Simple candlestick chart. Start on the monthly. I use a 9 EMA, 20 SMA. I'm looking for the strength of the trend by the slope and separation of the moving averages, where it's being challenged or violated, and any type of patterns that are setting up in the different time frames. Beautiful multi-year upward trend. They challenged it in at the end of 15, beginning of 16. Now they've taken it back. I keep talking about this falling three pattern, where you get a big green candle, then we get 3 down candles. Now we're getting a green candle. This is not set up yet. The month is not over, but it's something to keep an eye on. We're getting slope and separation now to the upside. The trend looks to be intact, and getting a continuation pattern on the monthly. On the weekly, we had the big down day, the limit down last week, and that took us down, and then we bounced back 152 points. Now we're holding above the 9 and the 20, and we're starting to get some slope. Not so much separation yet, but it does look like it could be a continuation pattern. We don't challenge the trend until we get down to 2148.75. I'm actually watching the 2143.50 as our key line in the sand, and it gets violated below 42. Going to the daily, you can see that we've got a good trend going. We've got price paralleling the 9. They pulled away a little bit, so we are getting a little bit of a technical gap, and so far we're an inside day. I'd be watching yesterday's low at 68.75 for clues. I'm really using the 66 still as my over-under line. A challenge to close the technical gap will take us down into the 21.58 area. Going to the intraday, you can see that we're starting to consolidate up here. We've lost slope. We're going sideways. We're below the 9 right now, coming down to challenge the 20. So no real trend coming into the market this morning. We're basically in balance. Going to the 1 hour, we are seeing a little bit of weakness coming in. We're below the 9 and the 20. So I'd be watching the 74 area above us. I'm really looking at getting above that 76 area. I'll show you why when we get to the composite. So we are seeing a little bit of weakness, but no real trend starting yet. Going to the 30-minute, you can see that we are seeing possibility of a start of a downward trend here, but nothing major yet. But we are seeing weakness coming in on the 30-minute. 15-minute starts to accelerate to the downside. We are getting slope and separation. There is a naked cross up here at 75. You can call it 74, 75 to be safer. And if we can get above that 73, there's a little LVN, 73.50 in the overnight profile. If we can get above that, I'd be targeting that naked cross on the 15-minute. Going to the 5-minute, you can see that the trend is accelerating to the downside, and we are below the 9 and the 20, and we keep rejecting the 9 on the way down here. We just went in on the news and put that double bottom in. So we created a weak low with a downward trend coming into the market. Now, with that said, we do have headline risk in terms of the Fed speakers, so you just have to be careful on that. All right, so let's take a look at the big picture. You can see that we have broken out of this longer-term value and balance. The value area high is basically at that 66 area. We created a profile up here that is the 2-day microcomposite VPOC is 73. The overall 5-day profile the VPOC is still down here. So we're trying to hold value the last 2 days here in the 72, 73 area, but we're fighting the value area high right now on the 5-day. We did shift the CHVN, the price up a little bit, up into the 72, 73 area. So I'd be watching if we do not hold the range low and break below that 71, they're likely to come down to the other side of this balance and test that 66, and then that's our over underline today. Anything below that, you want to be targeting that 60.75 and move back into where the accepted price just before the breakout. And then below 59, it gets a little bit stronger to the downside, and we get acceleration towards the most traded price, of the microcomposite, the MCVPOC, down at the 52.50 area. And then anything below 43, then I think that the interim high is in, and we're likely to come down for a bigger pullback and a trip through value in order to set up a rally coming into Christmas. I'd be looking for a move down to this 23.75 and the value area low down at 20.75 if we can't hold that 53. So take a look at the Globex. Our overnight high is up at 78.25. Our overnight low currently is down at 71.75. I caution you guys, that we're doing these. We still have 30 minutes or more than 30 minutes before the RTH Open, and we're only trading 2 or 3 points above the overnight low. So, even though we have these levels set, they can be changed after I close the go-to. So just make sure that you adjust your levels accordingly based on current information coming into the RTH session. 21.74 is the overnight POC. And we're sitting inside of this value area from yesterday. And there's really not much more information. There's a little bit of a 73.50 little CLVN, little LVN from the Globex, but it's really right inside of this balance. And you can see that we have not been able to get into the upper distribution or the lower distribution from Tuesday. So very much in balance, and we need to see which side it's going to break. Nobody knows which side it's going to break, so don't let anybody tell you that the next move is going to be above or below that 74. I'm going to be using 74.50 as a trade area, but I'm going to use it through to the 75.50. I want to be above 75.50 for a move to break yesterday's high at 76.50 and above the 76. 76.25, and above the 76.25, I'm looking for a move up to the overnight high and the naked close at 79.25, and the range high from Tuesday up here at the 79.75. Same thing with the overnight, with the value area low. That is also our overnight low. Anything below that week low, then I'm looking for a move down. My first target is going to be that 70. But I'm really looking for a move down to break the 69 and come down into the HVN, the VPOC from the Tuesday, the lower balance area of the double distribution day, and come down here with my next big key target is going to be the 66, or I should say our key line in the sand. And then below that, we're looking for the range low from Tuesday at 63, and then a push down to the naked VPOC at 61 and that 58 naked VPOC. Is that shifted? I thought that shifted to 59. It did, but that's not going to work for me. All right, so it's got to be 50, 55, 54.50. And then below that, we've got the microcomposite VPOC down at 52.50. Our daily ATR right now, 20-period ATR on the daily is running 26.70. So our downside daily ATR target is down right here at the 51.50 back into this balance. And we just happen to have our daily upside and daily downside targets at key areas. So this 66 is going to be really important. If we leave that overnight high alone and come down, break through the overnight low and break the 66, really going to be targeting a move back into balance down here at the 51.50. And then below that, we have the week low from last Thursday or Friday at 47.75. No, last Thursday at 47.75, and then our key line in the sand below that remains to be down at this 43.50. To the upside, above the 76 and a quarter, we've got the overnight high and this level up here in the 79.75 area. The key up here, of course, is the fact that we've got the double top at the all-time high at 85. We've got a naked VPOC at 83. And then we've got the unadjusted all-time high in September at 91.50. And this still has to be adjusted. And we weakened it by putting in that double top. And looking for them to adjust the all-time high and take this out. The daily ATR upside target is at 2198.50. Now our weekly ATR is running at 49.50. So our downside weekly ATR is all the way down at 2135.50. Okay, that is more than double. What is it? Double? Where are we trading right now? We are trading 74. So 2670 times 2 is 53. So that's more than double our daily ATR to get to the weekly downside ATR target. So I'd be really looking for, for this move above the range at 79, because I'd be targeting this up here in the next 2 days, because our weekly upside ATR target is 2202.25. So we're just below our weekly on our daily. So it's showing, what that's showing us is that our daily range is closer to the weekly upside range, and therefore we've got to still say that the risk is to the upside. That doesn't mean it's going to happen. It's just meaning that there's a better probability that we get continuation on this pattern than to fall back and come all the way down to this 35 weekly downside target. And there is a chance that both of them could be missed, and we could just chop in here for the next couple of days. But we do have option expiration tomorrow, so we'll start looking at where the maximum pain is and see what we're going to do in terms of where they're likely to pin it coming into the expiration. Okay, we're currently just, the Keltner is basically horizontal. It's, really just got this chop around the midpoint, or the Keltner center line. Our center line is 74.50. A move up to the upper Keltner takes us up into that 80, and that break of the Thursday or Tuesday high, and then down here, if we get below the Keltner, takes us down into that 68 area, and probably a test of the 66 by the time we get there. So what are my hypotheses for the day? I am looking for an open auction in range. I'm looking for a move down through value of yesterday, taking out the overnight low, and then somewhere between here and holding value, or coming here down to the 66 area, finding responsive buyers, and then walking us up through and pushing us up through into the 79, 75, possibly up into breaking that double top up at 2185. So hypo 1 is open auction in range, move down, find buyers somewhere between the value area high and the key line in the sand, and then walk us up through to the 85, taking out the double top, maybe pushing through to that unadjusted high at 91.50. Hypo 2 is an open auction in range, a failure to break out, or a failure to break out of Thursday or Tuesday, I should say, and then finding responsive sellers and pushing us down and coming down, testing the 66, breaking the 66, and bringing us back down into this 58, 60 level, and then maybe a late day push down back into balance at 52. Basically, my two hypotheses, my opposing hypotheses, is we either break the double top on the high at 85, or we break the double bottom and come down to balance and possibly even break through this 47 and come down to the key line in the sand down here at 43. Hypo 3 is an open auction in range, a push down to the 66 to 68, chop around in here, then fail and push through down into the 53, and then get a late day push and push down through into the weekly ATR and the 33, the next balance area down here. But I think that's low probability. Hypo 4 is an open auction in range, or open test drive, more likely an open test drive, test both sides of the value area, then the buyers taking control and pushing us up and pushing us up and pushing us up and getting a trend day up into the 2200s and a tap on the 2202 area, the weekly upside ATR target. So those are my main hypotheses. I'm going to keep this as short as possible today. That is going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.